Good afternoon, traders and investors. Will back here with another one. Well, we had another red day today in the markets. The downtrends are continuing off of some bad China data and some more Moody's credit downgrades. So we're going to take a look at that, take a look at our major index movement, take a look at some of the earnings that we had today for the rest of the week as well. And lastly, as usual, go over my portfolio. So without further ado, guys, we got a lot to cover. So let's get into it. SPY coming down 0.43% on the day, QQQ 0.85% down. So QQQ, one of our major losers on the day today. Take you into the heat map, you will see that it was a pretty broad market sell-off. Usually when we get some pretty bad macro news, guys, it will be a broad market sell-off in most cases. Now, we do have some outperformers on the day. Eli Lilly, whose earnings we will cover. But for the most part, guys, all of our major sectors red on the day. So broad market sell-off, downtrends do continue on SPY and QQQ. Now, if we take a look at some earnings for the rest of the week, today we had a couple nice ones, but we are going to cover tomorrow. Roblox, Disney, Trade Desk are some of the few that I'm going to cover tomorrow for you guys. And then on Thursday, we have the one that I'm watching, Alibaba. Can they do it? Can they get the recovery story despite negative China data that we got today? We will see. So what happened today exactly, guys, to drop the indexes this much? Well, early in the morning, we got another round of Moody's downgrades, this time on US banks. Surprisingly enough, you know, these rating agencies have been kind of late, right? So they downgraded USA credit as a whole last week, probably 3 months after the whole credit crisis. The whole budgeting crisis, right, was happening in Congress, as it usually happens. So they were a bit late on that. And now they're a bit late on this too, right? A whole 4 or 5 months after the entire banking crisis earlier in March. Now they finally decide to downgrade some of our small and medium-sized banks. So as you can see on this beautiful little chart here that Yahoo put together for us, banks are tightening the consumer loan standards. So their tightening capacity is rising. This makes a lot of sense. You'll see the spike here in COVID. Obviously, when nobody knew what was happening and the onslaught of the pandemic, it's very normal for financial institutions to taper credit, to really restrict lending, because they don't know what's happening. Here, it's a little bit different. Now, in my opinion, they are definitely tapering lending because of high interest rates, right? They do not want clients to be over leveraged on financing that they cannot afford, or potentially get into some loans that they will not be able to refinance in the near future should rates stay high. So we'll go over this very, very quickly, but in my humble opinion, guys, a bit of a non-event, bit of an overreaction by the markets in this case. Moody's cut credit ratings of several small to mid-sized US banks on Monday and said it may downgrade some of the nation's biggest lenders, warning that the sector's credit strength will likely be tested by funding risks and weaker profitability. Completely normal, guys, right? Obviously, if you're a major bank, it's hard for you to give out loans at these high interest rates. The demand for loans is just not going to be the same as when rates are low. So obviously, their profitability will get hit. It's in the bank's best interest to give out as many loans at high interest rates as possible, of course, because then they make the most money. But consumers are obviously not going to play along with that and would rather wait for interest rates to drop, right? So here we go. Last night, pretty much overnight in the session, we got the news. They cut the ratings of 10 banks by 1 notch and placed 6 banking giants, including Bank of New York Mellon, US Bancorp, State Street, and Truist Financial, on review for potential downgrades. So as of now, guys, no major names being actually affected by this in terms of your larger banking names in the US, but still a decent little event for the day here, considerably dropping, especially our XLF Financial ETF as a whole, right? So obviously, this comes as a mild U.S. recession is on the horizon for early 2024, and asset quality looks set to decline, with particular risks coming in some banks' commercial real estate portfolios. Now, this is normal, guys, with obviously the work from home trend that's been going on for the last 3 years. Very, very tough for them to rent out these massive office spaces. So any bank that's exposed to commercial real estate, namely office space, is going to be at risk, especially if they have to hold the bag at higher interest rates and they don't have the same amount of tenants as they had prior to 2020. So very, very, very logical downgrades here, in my opinion, by Moody's. Really nothing to look at more than that, guys. It's not as if it's a blindsided event. This was entirely predictable. I'm just surprised that they didn't do it sooner, right? So getting into a few earnings here, guys, that we had for the day. So our major movers, we'll cover these very quickly. Very first, starting off, Upstart. Upstart obviously got hit pretty hard in the last 2 days, right? 10 and 14% respectively. A bit up today, even though they were slightly down on the day, right? Recovered nicely, but then boom, after hours, earnings minus 20% back down to $42. Completely normal, guys. Upstart had run in excess of 340% since last earnings. So as a common theme that we've been seeing this earnings session, if companies don't deliver sheer outstanding earnings that no one was expecting, and they've run a lot, well, expect their share prices to be hit the same. And this was nothing different, right? Upstart stock plunges after earnings as forecast comes in light. And this is completely normal, guys. You'll see that actually their revenue fell to 136 million from 228 million, right? And they beat on the consensus here, but still a significant drop from their last year's performance, right? So very, very, very notable to me here. Upstart's lending partners originated 110,000 loans in the platform across the second quarter, totaling 1.2 billion. Conversion on rate requests was down 9%, down 13% in the same period a year prior. Once again, guys, this is completely normal. You cannot expect, if you guys don't know what Upstart do, they generate personal loans, either refinancing for cars, automobiles, etc. They look at a lot of different criteria that major banks don't look at, which makes them more favorable for the consumer. But still, it's very tough for one of these institutions to be selling 5, 6, 7, 8% loans to consumers in this type of environment, right? It's just the demand for loans is not going to be the same as when rates are low. Most of all your demand for loans was pulled forward during 2020 and 2021 when loans were basically a very hot industry. And that's also when Upstart had their massive exponential run rate. You can see it 2020 all the way through 2021 when loans were hot. So it's obviously going to be affecting them now with rates higher. They cannot get the same demand. No surprise there. Got hit pretty hard in the after hours here. This company, though, still is not making money, right? Not making money last year, not making money this year, which goes to show, guys, when the market for loans is not favorable for them with high interest rates, this company is going to struggle to outperform. So that's pretty much it for Upstart. Second off, we have our competitor here, one of the competitors to Tesla, right? Rivian, who sells electric trucks, right? So we're going to look at Rivian here real quick. In the after hours, guys, not really doing too much, right? They kind of popped as much as 3%, down as much as 6%, and now kind of ending flat. Rivian earnings were actually decent. I actually did not mind them at all. Obviously, they're still losing money. However, they do have about $10 billion of cash on hand. It will get them through at least another year and a half of production, and they are producing well. So you can see, guys, the loss per share was actually cut down from to $1.08 per share versus the $1.41 expected. So they're still losing money, but losing less than expected. And revenue came in slightly, ever so slightly higher here, 1.12 versus 1 billion expected. It now expects to build 52,000 vehicles in 2023, more than twice the number it made in 22. Very, very good. Up from its previous production guidance of 50,000 vehicles. So they raised guidance by a whole 2,000 vehicles. Not that much, guys, but still a slight little beat here. But obviously the same, Rivian has run a lot coming into these earnings. And like I said, guys, unless you get some truly amazing results here, you are not going to get the outperformance. You can see from last earnings, pretty much, they are already up prior to today's earnings, 76%. So a lot of the growth and the run was priced into the stock prior, which is why you're not getting the same lift on the shares, right? So decent report from Rivian, right? They did report better than expected revenue and better than expected earnings per share, even though still negative, but just not enough. Rivian still has a lot of ground to cover before becoming profitable. And Elon Musk has always said it best. It is very, very tough, guys, for an automobile manufacturer to produce at scale and become profitable in this new modern era environment. Third, we have Eli Lilly. If you guys didn't see Eli Lilly today, healthcare stock, maybe you guys don't look at healthcare stocks that much, but we've been looking at healthcare, guys, to put in a bit of a rally. Today, Eli Lilly up 15% on earnings, crushing their all-time high again. And if this is not one of the most beautiful long-term looking charts that you've ever seen, I don't know what to say, but this chart is always usually very stable. They're a major player in the healthcare industry, and they had tremendous earnings, beating pretty much across the board. You can see their PE ratio has always been slightly rich, but they do deserve it as an industry leader. So you can see, guys, that this company on an annual basis continuously prints revenues higher and higher and maintains very decent margins between 20 and 25% pretty much for the last roughly 5 years, except for 18 here, a bit of an outlier. So they're on pace to once again deliver phenomenal earnings this year as well. Adjusted earnings are up $2.11 per share versus $1.98. So big beat here, 5% on adjusted earnings, and revenue almost up about almost 10%, right? Against guidance, 8.31 versus 7.58. So very solid by Eli Lilly. Obviously, this is a company that will depend on the performance of certain drugs that they're testing. So now you see they raised their full year guidance as Mounjaro and other drugs drive second quarter profit up 85%. So very good performance by Eli Lilly. Obviously, to keep track of all the drugs that they're testing and whatnot is a very big ask for most people, but just know that they are one of the market leaders in terms of drug development and drug research. And whenever these things go well, they always tend to get some outperformance, because if you guys know, the margins on drugs, especially in the pharmaceutical industry, right, are absolutely massive. So when they have success with a few of these products, it can really carry them up for a few quarters, if not a year or so. So very good outperformance by Eli Lilly. Happy to see that healthcare names are doing as expected and putting in some outperformance. You've seen it from Johnson & Johnson. You've seen it from the AbbVie earnings, right? ABBV. You've seen it from their earnings as well when they had earnings, right? So very good performance here on healthcare in the last month or so, if I do say so myself. And the last one that I want to cover for you guys, if you guys are potentially watching, is Datadog. Datadog getting hit very hard, guys, but completely normal once again. From last earnings, right? They were up prior to today, all the way up to 66% in the quarter from last earnings. So a lot of expectations were baked into this one, and they just couldn't get it done, guys. Down 18% on the day. So a bit of a disaster for Datadog in terms of the earnings. But once again, guys, it's very tough. I don't know if I've said this on the channel before, guys, but it's very tough for these SaaS companies to generate significant revenue when you're in an environment where a lot of major names have been slashing their costs internally. So they've been cutting down on labor and they've been cutting down on excess technology spend. You've seen it happen with Facebook, Amazon. A lot of the major players are doing this. So a lot of major companies now, especially in light of a potential recession, are going to cut costs. And when they cut costs, unfortunately, businesses like Datadog suffers. Datadog shares tumble on softer outlook and drags down cloud stocks. So Datadog obviously not in a position to have much pricing power. You can see, guys, that unfortunately they still do not bring positive money to the bottom line, generating good revenue every single year, but fail to generate positive net income. So they are still growing. I'll give them that. They're growing at a very fast pace, but this is not an environment that favors companies that are losing money and unfortunately do get cut when companies have to cut costs, right? So Datadog has a lot of big partnerships, guys. They're partnered with Amazon, they're partnered with Toyota, just to name a few. So long term, this company should do well, but in this current environment, it just doesn't perform well unless they truly beat revenue and EPS on a massive scale. And unfortunately, they weren't able to do that today, right? So plunging here today quite considerably. But as I've been saying before, guys, I mean, they didn't give really bad numbers whatsoever, right? Their revenue was not particularly bad. Their earnings were not particularly bad. They're still growing 25% in terms of revenue compared to a year ago, right? Which is phenomenal. You love to see companies growing in excess of 20% per year, but unfortunately still negative. And they are not able to onboard clients as well as they were in 2020 and 21, let's say, because companies have been cutting costs. That was the major takeaway from Datadog. So with all those earnings been said, guys, let's get into some charts. Let's get into some major tech names. Yeah. All right. So SPY today, continuing our daily downtrend, right? Daily downtrend confirmed, new low on the day here today, just pushing the daily downtrend, guys. So at this point, daily downtrend is confirmed. We are still just looking for the continuation. Any single bounce is just for a lower high until the bulls are able to put in enough of a bounce that they can test for a reversal. But now at this point, guys, we're just looking for weekly consolidation continuation. Keep an eye on your 440, which is the 12 EMA right here, right? But still, obviously for bulls, tons of space to come in and set the weekly higher lows on SPY. But as of now, guys, the bears are in control of the short-term daily downtrend. QQQ, same principle, right? QQQ, daily downtrend as well. You guys can see it. It's a bit more clear than on SPY. And today, pushing towards a lower low, right? We had a good base of support here, but today the bears were able to smash through. Now, it is fairly good, guys, that the bears are not able, even with news today, that they're not able to close down the low. So we had some very good recovery. Don't get it twisted. Very good intraday recovery on both QQQ and SPY. SPY actually finished over and above where we opened for the day. So you'll see this is your 9 o'clock candle, and we did finish higher. So the bulls are really buying these dips aggressively, guys, and you do love to see that. It means that people overall and institutions are still bullish on the market. But for now, guys, we just have to bear with the daily downtrend at this point, right? So we're going to be expecting the daily downtrend continuation until the bulls are able to put in an engulfing move, set enough space for your higher low compared to a previous low, and reverse the entire daily downtrend. But for now, that is not happening. So we're still looking for weekly consolidation continuation. Keep an eye out. Your first stop is coming up soon. 364 is going to be your level here for the 12 EMA, and big support down here, a bit lower here around the 359 area. Those are the two areas to watch, but so much space to set weekly higher lows in the event we continue dropping. XLF financials, terrible day, but insane recovery, guys. They really recovered nicely from this initial drop off of that negative news from Moody's last night, right? So very good recovery from XLF intraday. Bulls playing very good defense. We did lose. We lost the higher low, guys, today, right? So what we were looking for, 34.20 was the level we were expecting higher low and bulls to push. Well, now, unfortunately, they didn't get it done here. So unfortunately, guys, we are now stuck in somewhat of a tightening range. I wouldn't say until I see a close down here, I wouldn't say that the daily downtrend, right? Daily downtrend is in effect, but we're just kind of range bound here setting. If you zoom out, you'll see it clearer. This is just your weekly bull flag. We have been looking for the weekly higher low. Anything above 32.50 is your weekly higher low. So we're looking for the weekly higher low. And eventually when it's set, we're going to be looking for that push into this 36, 37 area of resistance. But for now, bulls playing a very decent amount of defense. Need to see the bulls eventually engulf these highs here at 34.50. So we'll see how long it takes, whether we continue to kind of range bound and bull flag downwards slightly. But one thing's for sure, the bulls are in full control of the weekly, just looking for your weekly higher low for your push into resistance. XLV, decent day, right? Mostly powered by Eli Lilly. If you notice, guys, that of all of our major indices, right? Of all of our major indexes, only a few were up today on the day here. Healthcare with your massive outperformance due to Eli Lilly, which I just showed you on earnings. So now, in my opinion, guys, the daily move is actually set. So you do have your daily higher low, guys, at this point. Anything above 132 is just going to be for continuation to the upside as well. And on the weekly, what are we looking for, guys? 129 was your area. Weekly higher low now also set at around the 132 area. Going to be looking for the bulls to push this. Keep an eye on your resistance, guys. 136.86. If you crack this, you confirm the weekly uptrend continuation. And at that point, you will be looking closer to your all-time high areas of resistance, 139 up to 140. Great job by healthcare bulls. IWM Russell. Bulls coming back nicely in the day, but your daily downtrend is set once again. So we have now come away a bit from this area of resistance. So the bears are kind of taking control of this. We'll see what happens throughout the rest of the week. Keep in mind, inflation data on Thursday will affect growth stocks the most. So keep an eye on that for sure. But as of now, daily downtrend is set. So we look higher to the weekly. What are we looking for, guys? You guys should know this by now. Anything above 180 is just going to be your weekly higher low. Keep an eye on your area here, 188-ish for your confluence, 12 EMA, and horizontal support, right? This previous area of resistance is now going to be horizontal support. So keep an eye. If we do continue to resume this daily downtrend for the bears, you have big area here coming in. And on the weekly, you have your weekly moving average right there. So just looking for your weekly higher low, but weekly consolidation. Now that this is in a daily downtrend, rejecting from this area, consolidation underway. And we're going to be looking for the bottom here for a potential swing higher when it happens. Dow Jones names looking fairly, healthy, especially with today's recovery, right? So Dow Jones as well, what were we looking for? Well, the daily downtrend, bears not able to carry through on it yet, need to see a close below this level to actually consolidate that. So when you're unclear, when it looks like a bull flag on the daily charts, we are obviously rejecting from this area. What are we looking for, guys? Zoom out to the weekly. What are we looking for? Anything above 33,600 is your weekly higher low. Keep an eye, confluence. You have this whole beautiful line of horizontal support. You also have your 12 EMA right there, right? So if we do continue to come down, let's say inflation and whatnot, over the next week, two, you do have a beautiful area here for your retest zone for a potential move higher, but bulls in full control longer. It's just that now bears are getting a bit of control on the shorter time frames. Bitcoin with a nice day today, actually, guys, but still not enough. Unable to close above our 30,000 mark. But bulls putting in a very, very nice day. Decent little upswing here, creating some space. I would like to see bulls put in a bit more space, close above here in the 30,000, come down and sit on it, and create your first daily uptrend in a while. Keep in mind, still looking for the weekly higher low. So now is a crucial moment for bulls. If they can close above this area, I will be confident in saying 28,500 was your weekly higher low for future continuation. Bitcoin obviously benefiting every time that the banks get hit. You will notice Bitcoin always benefits. So today was no different, but I need to see a bit more from the bulls. I'm not convinced yet that they are through this zone. Now, big tech, Apple, decent little recovery day, guys. They stopped pushing newer lows, right? So we're waiting, just waiting for Apple's move to bottom out. I was calling out the RSI in yesterday's video. Apple doesn't get down to this low level of RSI. Look at it, okay? Right near the low here. Zoom out on the daily. How many times do you see it go under that? Not many, even back in 2022, right? Not many. So whenever it comes down this low, guys, you're expecting a bounce. Are you expecting total recovery? No, but you're expecting a little bit of a bounce here. So we're going to see Apple is currently in its post-earnings bottoming process. We're going to measure the size of the bounce. Probabilities wise, we are expecting a higher low lower high compared to your previous high all the way up here. But we need to see how high is that lower high going to be. If it's something like this, before coming back to the lows, I can confidently probably say that we're going to go down for some more. But if we bounce all the way up here, then it changes things. You can end up with a tightening range and accumulation, or you can end up with your daily uptrend reversal. So we're going to measure once the bounce starts, because it hasn't started yet, right? Even if we continue trending down, when the bounce starts, how high can the bulls get? That'll give you a good indication. But as of now, guys, the bears obviously in full control, daily uptrend lost. So we zoom out to the weekly. This is just weekly consolidation. And as I've been saying, anything above 160 is just your weekly higher low. Sweet spot on Apple, 175 to 170, almost there. Previous all-time high support zone. That's why I have this zone right here, okay? AMD performing fairly decently today, despite the rest of the market falling off and actually a cliff. I say decent, but it's still down 3%, right? But could have been a lot worse, guys. Dropped a little bit, recovered intraday here, still trapped in your little range here. So gonna keep an eye once again when we're range bound, right? We need to tighten up a little bit more. Keep an eye, 107, lose 107. You will be just continuing your weekly consolidation and monthly consolidation. Keep an eye, AMD, most important for time frame for me right now, the monthly. For 3 months, we've been looking for this monthly higher low for potential future upswing. So until we get that, guys, the break of this range is going to do that, right? How will you know monthly consolidation is pretty much finished? If we can crack 121.50 and consistently close above it, then you'll know that your monthly higher lows are in and you're good potentially for a few extra months of performance on AMD. If AMD continues trending down towards here, keep an eye, my sweet spot 107. I almost wrote some today, but I was a bit greedy, guys. There wasn't enough on the 107, 108s. The best I could get was the 109s. And I want to kind of get a bit more greedy on AMD, especially we do have inflation coming up on Thursday. So I'm not going to get too ambitious with my plays today until I see that report, especially with QQQ and SPY in daily downtrends. So as of now, AMD still stuck in a range. One of two things need to happen: crack of the lows or crack of the highs, and you will have your longer time frame establishment pretty much will be able to determine more levels, but for now, kind of muted. Amazon still decently holding up gains, right? Just keep an eye, guys. Daily uptrend is obviously confirmed. So now we're just looking for anything above 126.50 for your daily higher low. Keep an eye. Moving averages are catching up. This looks exactly like Google. Moving averages are catching up. Keep an eye. Confluence here, 135-ish. With your moving average coming up here, if we do continue to come down on Amazon, expect some big reactions here. And once that is set, well, obviously the weekly bulls are in full control, right? If we do come down a bit more and push higher, guys, you are zooming out for the 140 to 145 range of resistance here. That is the next area for Amazon. But as of now, daily consolidation, and we're just looking for a potential higher low. Next up, we do have Google. Google, very decent day on Google, right? This is why I say Amazon looks like Google. Look, same thing, right? Gap up on earnings through this whole area of chop zone, right? And then comes down, sits on the support, sits on the moving average, and now continues to rise. So Amazon wouldn't surprise me if it ends up looking the same. But Google now, daily bounce is underway at this point, guys. So keep an eye, your 127 area. This area is now crucial, right? Because if we lose it, daily downtrend is confirmed. We would be in for further weekly consolidation. But the weekly bulls are obviously in full control. Tons of space to work with. Anything above 115 is just a weekly higher low in case we keep consolidating. And to the upside, guys, if we do crack these high here, 133, you're looking all the way to 141 to 145 area on Google. Same prices as Amazon pretty much, right? So just keep an eye on that. For Google. But for now, guys, Google bulls are really in full control. Really one of my favorite charts. Meta playing some good defense, but kind of caught in no man's land here. So we're kind of just tightening up here. We're kind of bull flagging near the top. You can see this bull flag on the weekly, right? So on the weekly, crucial area to hold here on Meta is going to be your 289 area, right? So this whole support zone right here is going to be very crucial. Very crucial. For now, just tightening up at the top, still looking for your daily higher low above this area, right? So all of this is just daily consolidation. Doing a good job of holding the 12 EMA, right? What you wouldn't want to see is something like this. It would be a daily downtrend confirmed, guys. So just keep an eye out on that. But tons of space on the weekly to potentially pull back a bit more before maybe putting in a leg higher. But as of now, guys, Meta bulls looking fairly decent, not dropping too much on the day today, really holding the high levels. And if we do crack 326, well, you guys know we're going to 333.35. Microsoft still trapped in a little daily downtrend here. We have once again cracked the lows. We're now below our initial little channel here, but we got one guy left down here at 322. So you guys know I've been saying this is a range. I should really make two lines here. I'll make you guys happy. I'll do that right now. All right, so now we got two little lines right up here. So you can see that this little zone, right, still trapped in this little support zone that's acting here. Microsoft still in daily downtrend motion. If you want to see the bulls reverse this, I said yesterday what needs to happen. Need to see the bulls engulf your previous move, create enough space that the daily higher low compared to your previous low is likely, and then move to the upside. But for now, Microsoft just in daily consolidation. As long as it's in daily downtrend motion, you are still looking for your weekly higher lows, guys. Unfortunately, now Microsoft is pulling back quite a bit at this point. So they are doing two things at once. They're doing the weekly consolidation, but in my opinion, they are also putting in your monthly consolidation too, right? So even if August is a bad month as a whole for Microsoft, still just looking for a monthly higher low from all the way down here. Tons of space on Microsoft. You can see, guys, they just consolidate for 2 months sometimes and continue higher, consolidate for a few months sometimes, and move higher, right? So really not worried for Microsoft at all. It's just their turn to consolidate, guys. So as long as we can't stop this daily downtrend, your weekly consolidation is going to be continuing. Keep an eye on my sweet spot, guys. 310 all the way down to 285 on Microsoft. NVIDIA doing a fairly decent job here today of holding up, right? AMD was down over 3. NVIDIA only half of that, right? So NVIDIA kind of still consolidating here. What we were expecting yesterday's video, I told you guys, expecting a lower high compared to our previous high. We got it yesterday, and now we continue to move down. So NVIDIA still in a bit of a daily downtrend. You guys will see it. It's very, very obvious, right? So keep an eye. If we crack our previous 435, the daily downtrend continues. At that point, as long as you're in a daily downtrend, you zoom out to the weekly for weekly consolidation. Anything above 400 is your weekly higher low. This is a weekly bull flag, right? the bears not able to get too much off of NVIDIA's top here. Still a weekly bull flag for potential move up, right? If the bulls lose your 400 area, then we can say, okay, Will, monthly consolidation is underway, right? But as long as we're still in a weekly uptrend, sorry, I'm laughing. It's just funny how NVIDIA can run this much and the bears just struggle to take back any of the moves, right? So 4 weeks of consolidation now, you know, consolidating sideways, moving averages are catching up. So keep an eye, your 400 level is key. But as of now, until the bulls are able to put in enough of a move against a downswing to create space to reset the daily uptrend, well, your daily downtrend remains intact. Tesla, bulls playing decent defense down here. They really don't want to lose this level here, guys. 240 at this point is crucial. Why is it crucial? It is your weekly higher low. Now, we're pulling really back hard into it. As you can see, if I zoom in, bulls playing great defense with that 12 EMA, right? But you don't want to lose 240. If you lose 240, you kind of lose the weekly uptrend and you set yourself up potentially for, at best, a tightening wedge, or at worst, a weekly downtrend into further monthly consolidation. But at this point, guys, the bulls control the higher time frames. They do still control the monthly, right? Which is why I have my sweet spot zone down here. If ever we do lose this and pull down, it's perfectly fine. 230 to 210 is my sweet spot on Tesla anyways. But for now, bulls doing a decent job despite being trapped in a classic daily downtrend. So we'll see. Right? We're putting in some kind of big support levels here, right? So if we do get a bounce, guys, just keep in mind to reset the daily uptrend, I need to see a crack of 265. It needs to bounce, engulf this move, create enough space that you make a higher low compared to your previous low, right? And then boom, and then you're set. You'll know your weekly higher low is set as well. But now bears are doing a very decent job, which is why I haven't taken off my calls yet. So Tesla, really two major levels of importance, right? 240. If you lose this, guys, you have to zoom out. You can expect to move potentially lower, right? There is still a gap to be filled here at 234 maximum, right? On the upside, guys, if you want bulls to recapture this, need to see a break of 265 in my opinion. And lastly, PayPal and Palantir. So PayPal still in its earnings bottoming process, still not being able to catch a bid, unfortunately, right down again 2% on the day. But PayPal, you guys know, sometimes this bottoming process does take a while before you get a daily trend reversal, right? So we're going to keep an eye when the bounce gets started. How high can it be, right? If they only put in a bounce like this, well, then you're most likely heading to the lows. You can aspire for a double bottom or the flush. But if we put in a nice bounce like this, guys, then you create enough space to create your daily new uptrend. But as of now, still in a bottoming process, guys. Support zone down here around $59.60. And Palantir, unfortunately, falling off today. 5% was down as much as almost 9%, 10% guys on the day. So as of now, guys, bulls playing good defense at this 16 zone. You can see it dropped all the way down there. I don't like how much of this move bears have been able to take back, but still closing above here. We'll see what the bulls can do, potentially forming up for a tightening range here at the top. Will be very, inflation on Thursday is either going to make or break this stock as well, in my opinion, right? So the best the bulls can do is obviously V-shape, but now the bears have come down so much that, in my opinion, tightening range is likely, or at worst case, your daily downtrend commences, which would be okay. We're still just in weekly consolidation on Palantir. You have your 12 EMA down here at 1550, and anything above 1375 is just your weekly higher low for potential continuation. And lastly, guys, my account, we'll go over this very quickly because there was no trades today. I'm waiting for inflation. Today, negative news. I was waiting for a red day, but negative macro news, credit rating, stuff like that, all broad market selling off at the same time. With Thursday coming up, inflation data, did not want to risk it by taking on more positions. I would rather sit back and mitigate the risk, especially since I'm still assigned in a few positions already. So keep that in mind. Portfolio obviously down today on the day, right? Down to about 55% here against the S&P 500 as well, just down about 54% here. S&P obviously isn't reflected yet, but they were also down close to 1% respectively, if not a little less here. So still coming down a bit. My portfolio is not immune to red days. I have a higher beta than the SPY and QQQ, which means that if SPY and QQQ drop 1%, my portfolio tends to drop a bit more because I'm running a slight amount of leverage on it, and obviously it's more concentrated. And in terms of the positions, guys, you will see no change. So we are still assigned on a few positions here. Let me just change this up. Boom. Now, as you can see, guys, we're still assigned, haven't done anything. The AA, the CSIQ, the Teslas still assign these positions. You can see the shares down here. The Apple puts almost worthless, guys. Pretty good job on Apple. I was almost going to close them when they were about 24, 25 cents, but I chose to left them. I was going to do the AMD 109s instead. They were kind of screaming at me, but I chose to just remain with Apple. AMD 109s is not my sweet spot. 104, 105 would be more of my sweet spot. Apple 175 is my sweet spot. So that's why I just kept Apple. The premium difference wasn't that much. Even though I'd have gotten less exposure, but we'll see tomorrow. I may swap these Apples out. Obviously, the SE calls as well. Estee Lauder down a bit again, right? So taking a hit on Estee Lauder, taking a hit on my Canadian banks today with the banking news. PayPal not performing well, and Tesla is entirely covered. So we won't really even talk about that. The net loss now on Tesla, it's been 3 weeks that I've been rolling this one. This is pretty much going to be week number 4. So, you know, Tesla, very, very decent. I've been able to mitigate the loss from about $1,200 all the way down to under $500 on 200 shares, which is amazing, right? That's less than $2.50 per share. So when I do take these off, when the daily uptrend on Tesla will be confirmed, I'll be more confident to take these off, take the protection off, and we're going to ride Tesla to the moon. Not so much the moon, but we'll just ride them up. So no change in the portfolio today, no new positions, just riding out our current positions here and awaiting better opportunities and inflation data on Thursday. So guys, if you enjoyed the video, consider giving it a like, consider subscribing. I appreciate all your guys' engagement. It really helps to grow the channel. I will catch you guys tomorrow after the close. Hope you guys had a great day despite red day. Don't focus on the bad news too much. Like I was saying, guys, the China news was to be expected. They're obviously having some struggles after having shut down their entire country for 2 years. So now they're expected to have this grandiose recovery. But unfortunately, global macro and high rates and global inflation it's not allowing them to just skyrocket their economy back to normal, right? So completely expected. And the credit downgrades on the banks, completely expected. And to be frank, 4 months late in my opinion. So a bit of a non-factor, but does obviously have markets tumble on the day of the news. Inflation Thursday will be key. So keep an eye on that. I've been saying on the channel for a while now, would not surprise me if it comes in a bit hotter. And especially since we're in daily downtrends and weekly consolidation, could just be more fuel to the fire to add for more consolidation. So I hope you guys have been preparing for this. I've been calling it for a while now at this point, so it shouldn't really be a surprise. Please don't tell me, Will, I got caught with my pants down. I really wouldn't want to hear that. So anyways, guys, take care. I'll see you guys tomorrow after the close. Have a great night. Peace.